When you get the market having a follow through day, what's your typical response in knowing whether or not it's going to work? Because let's face it, they don't all work.
When you have fall through day, you must buy something, right? You must look for something to buy,
Mhm.
right? And so that is a key part of the follow through day. Now there's a reason for that because and we saw it last year when you go through some severe corrections, when you get a fall through day, you don't want to buy anything on that fall through day. You're naturally assuming that it's not going to work. Why should I throw any money at it? So you definitely want to use that rule of 100%. If you see something breaking out that you like, or something that's pulling back or getting through some kind of resistance, you want to put a little money to work because it's very important because having a little bit of money to work can help shift your mindset. It's
Mhm.
very easy to become so bearish or even so bullish, right? After a few weeks of the market going up or going down, it's amazing at how quickly your mindset can change. But when you throw those little probes in or you take one position in, and suddenly you see that the fall through day is slowly starting to work, meaning that the position that you bought isn't stopping you out, that slowly will give you more confidence. And yeah, I think a perfect example, Justin, is the April 2020, right?
Oh,
April 6th,
absolutely. Yeah.
2020,
Yeah.
um, where we had that, and the last thing I wanted to do, and and honestly, I think we had it. We had a falter day on April 2nd. I want to say on the
The
S&P
S&P
500.
500.
I
Mhm.
didn't buy. I didn't buy
Yeah.
anything that day. But when we got it, so say, I mean, I mean, say, because that was the last thing I want to do is
Yeah.
buy this market. But when when I got that April 6th one, I was like, okay, I got to buy something. So I think I just threw a little bit, a tiny, like 5% in, maybe 3% in. But after a few weeks, yeah, I started seeing, just kept slowly pulling me in, and I was probably, maybe 3, 4 weeks, I was pretty maybe 80% or so,
Mhm.
because it just kept all of a sudden just saw another reason to have more exposure, another
Mhm.
reason. So that you want to try to be as true to the system as possible, because if you don't, you're going to find yourself in an environment where you're going to miss out on that rally.
Right. And, one of the things that I really like about what you said is kind of that slowly, right? It's an incremental approach, and that allows you to get some feedback on your trades, and if your trades are working, then you feel a little bit more confident. Hey, I can dole some more money out because I've got some cushion on these stocks. I can either add to those positions if I started a little bit small, or I can branch out to new ones. And it quickly becomes one of those things where you have a little foot in the door, and as the door widens open, you're getting more and more of your body in there. But if you get your foot in the door and the door comes slamming on it, it's better to lose a toe than an arm. Instead of
Yeah.
being too heavy, because sometimes, and look, we both talked about this before, but in 2000, that was my biggest mistake. Was it was all of those rallies that I got into too heavy, getting back on margin. And because margin was so much fun in 99 and 2000, the first part of 2000, I wanted to get back on margin as quickly as possible. But it was, the rallies were short lived. I was getting way too deep, way too quick, and I got my head handed to me. And so all of my flexing that I was able to do for getting out at the top pretty well, it got decimated. I lost over half my portfolio. Luckily, I was small at the time, but half my portfolio was gone by the time the market finally bottomed in, well, October of 2002. There's that October number again. So yeah, I do think that you really have to make sure that you're getting that traction before you dole more money out. But what about those cases where you don't get the traction, where you know things just aren't working? What do you do?
So 2022, I think, was a perfect example of that. I want to say we had what, 7 failed falter days
Right,
in
right, yeah.
2022, right? I think the average bear market has like around 7 failed falter days, and so what do? You just keep getting, you take small hits
Hmm.
there, and I was even in those fall through days, I'd try to buy something, and it was like a 1 to 2% position, and then
Hmm.
I just got stopped out of it. And then even then, I feel like I was still a little too slow during this last rally. I was in, but I didn't. I still doubted it, right? Because that's you're fighting human psychology, you're fighting human nature at that point where you get conditioned to and very quickly too, but especially after all of 2022, where it was just so brutal. It's psychology and mentally, it's hard to imagine that the markets can ever go up again when
Hmm.
all you see is just stocks not working for that time period. And so that, but we had to fall today. There were things to buy, and as we saw in this last rally here, it ramped up pretty quickly, and all of a sudden there were a lot of things to buy, right? And so,
Hmm.
but you had to be those windows. They open up pretty quick and they close pretty quick. So you have to be pretty quick to get into them at proper buy points, or you're going to miss out on these little on I guess what was a 2 3 month rally right here. You're going to miss out on it, right? And by
Hmm.
the time you get into it, that's when the markets are now going. Hopefully, this is just a normal kind of corrective phase, right? Hopefully,
Hmm.
we're still in a longer uptrend here, um, uh, but uh, but yeah, you have to stay true to the system. And I'm talking from experience because I've done this myself. I mean, you just have to listen to the market when it's time to go. When you get those signals, it doesn't matter what happened before. It doesn't
Hmm.
matter how much money. Justin, the market didn't care that you lost half your portfolio in
Right.
2000, right?
Yeah.
You have to follow the rules, and you have to follow the system, and slowly, incrementally move. And so I think that's the biggest thing. You don't want to go too heavy. And one of the things for me, Justin, was, and this took years. I mean, it's ridiculous now, but 20 plus years ago, we didn't have a lot of this kind of knowledge coming out so easily. But
Hmm.
I was the incremental didn't even make sense to me at that point. It's like if I want to buy stock, bought the whole position
Right.
at that
Hmm.
time. If I wanted to sell, I sold the whole position. And what happened is a lot of times I was missing out on a lot of it, and I was selling right at the bottom, and then I was mortified when the stocks would go up without me again, and it was hard to get back into them. And so that's where that incremental comes in, because it helps you manage those ebbs and flows of the markets, of the stocks, and it makes it more possible for you to manage what can be some very, very volatile stocks.